Good morning from our global headquarters in New York. I'm McNally alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The AI race heats up. NVIDIA unveils plans for annual chip upgrades. AMD, meanwhile, speeds up the launch of new processors. Sold out, Aramco's $12 billion stock offering meets a wall of demand. Executives hit the road to court foreign buyers this week. And we are live from the Dubai IATA meeting. We're going to bring you our exclusive interview with Virgin Atlantic CEO Shai Weiss. Happy Monday, Manus.
Happy Monday, Danny. Yeah, it was a beautiful weekend. The sun was shining. What is not to love? The sunshine was out, the rain is banned, but there was a bargain hunt on Friday. The last 20 minutes, it was like the last 20 minutes of a Black Friday sale in the S&P 500. Stocks managed to rally into the close. We have a couple of nuances this morning. We're up an eighth of 1%. I love GameStop. I love this story. We've added $6.5 billion in market cap. It was $7 billion at one juncture. Of course, GameStop, part of the meme frenzy. Keith Gill, we understand, on Reddit has intimated that he bought 5 million GameStop. We need to verify that. We'll talk more about that a little bit later on. One other stock for you to track, GlaxoSmithKline. GSK plunges, the drug maker, facing Zantac cases in Delaware. So it is to appeal a ruling that says doesn't determine liability. So looking at a potential $3 billion liability for Glaxo. We'll keep an eye on that stock. Yields, we're counting down to non-farm payrolls this week. Savings rated the lowest in 16 months, Danny. And Kashkari says we can extend for a period of time. They've agreed at OPEC Plus to extend the cuts to the end of third quarter. And then there will be a unraveling of a series of cuts. We will talk more about that through the hour. And the UAE gets a 300,000 barrel kicker for next year.
This week should be an interesting one because we've seen in this market stuff that's usually tier 2 data. We can react off of it. We can react off of consumer confidence that we usually don't care too much about. But what do we get this week? As you mentioned, we get jobs, we get the ECB, we also get ISM manufacturing and services. After PCE maybe lulled us into the sense that inflation is coming down, it could get spicy this week, man.
Yeah, I mean, that lowest PCE reading was something that helped the bond market. But if you look at, I mean, I like the way you say it's tier 2 data. We're rolling up to tier 1 data on Friday. I'll trade anywhere, tier 1, tier 2. But we roll straight through to Friday, and of course it is about the jobs report, and some of it sticks in the head on a Monday, and some of it doesn't. 222,000 is what we're looking for on the payrolls, and 4% unemployment. So I think you're right. The tier 2 will set us up with a batting average into the Friday delivery on the jobs report. Yeah,
it's this unknowingness that makes us react so much. We want to know what's happening with this economy. It is confusing. Let's get over to Pooja Kumra, head of European rate strategy at TD Bank, to help us solve the mystery. Pooja, a lot of stuff happening this week. What do you think has the potential to shake things up the most?
Hello, good morning to you. So again, as you said, lots of focus when it comes to central banks or data as well as the labor market report. I think key for us will be ECB committing to their rate cut that they have actually pre-announced pretty well. BOC on Wednesday as well, whether they actually go for the cut. And actually, you know, this week we will actually see that theme of divergence between Fed as well as the other central banks to be more prominent. And I think that's what will be key for markets. And ultimately, it's the Friday payroll, which would be key driver for rates markets.
What will the scale of divergence be by the end of the year between the ECB and the Fed? And does that put a floor on euro-dollar?
So when it comes to Fed, I mean, we expect Fed to cut rates by 50 basis points. When it comes to ECB, the economy is actually faring pretty well. So we are looking for 75 basis points in cuts. So in both the cases, we are looking for more cuts than what is being priced by market. I think at this stage, what we are seeing that no market can actually diverge that much when it comes to rates, because 10-year yields will be anchored by how treasuries actually perform. But if we see financial conditions tightening just because of Fed not cutting rates, I think that will require both ECB, BOE, BOEC to actually do more, because they do not want financial conditions to tighten too much. I mean, growth data in Europe has been improving, but still we are looking at growth which is sub 1% versus US, which is basically around 2.5% when it comes to trend growth.
Wait, so Pooja, can I just clarify? So if we have a Fed that you say isn't cutting, and that means we're seeing some tightening, it means the ECB will have to cut more because they don't want that undue tightness? Is that what you're saying?
Yes, I think, again, I think there are two components when it comes to policy. One is looking at euro-dollar. I think euro-dollar is basically priced for basically Fed not cutting that much. Next is via the financial conditions. And I think financial conditions in Europe have started tightening in the recent sessions, with bonds actually trading at 2.6%. So I don't think that ECB wants to sound overly hawkish. They are data dependent, but I don't see them actually be just not cutting rates, just given the fact that the recent inflation data was much higher than what markets were going in for.
So a lot of people in the market are trying to understand the cadence, the process of cutting. One cut in June, and there is a theory out there that then the ECB waits until the early part of the autumn, maybe September, October, before they cut again. Is that sequence something that you think it will take hold? Because you believe that Lagarde is fundamentally dovish.
I think ECB as a team is much more dovish as compared to the other committees. But yes, I think quarterly cuts make more sense right now, just because growth has actually recovered as what ECB was expecting. If we were in March this time, the kind of data we were getting in March, I would have said that ECB would need to do June and July consecutively, just because one rate cut does not change the financial condition, the dynamics for the economy. But right now, ECB, Euro area, both are in a better place to have much more optionality. And that's why it makes more sense for them to cut next in September. That being said, I don't think on Thursday they will be ruling out the July case of cuts. I think they want to keep all optionality open right now.
Pooja, to that point, part of that optionality arose because we've had some hotter inflation readings. You had wages in the euro area come in 4.7%, matching a record that was previously set. You had CPI for many regions, Germany especially concerning, last week also come in hotter. I know you said some of the tightness is coming from the US, you have more optionality, but couldn't I also argue that it is fundamental? It is a more sticky inflation in Europe than perhaps we first thought?
No, I mean, I clearly agree with you, but the numbers that we saw this month were also driven by one-off factors. So I know ECB will actually keep that in mind, but in general, we are seeing deflationary impact across European inflation numbers. So I think in theory, we are getting towards core as well as HICP to actually be at 2% in the near term. And I think that's what ECB's forecast will also reflect in Thursday, that they are still seeing headline inflation to be at 2% by end of 2025. So as long as they see that trajectory, I don't think that they need to sound overly hawkish. I don't think that has changed.
We are going to get a snapshot of the employment situation here in the United States on Friday on wages. Non-farm payrolls are expected to come in 222,000. But then we look at what Kashkari has been saying over the weekend. And again, really pushing this extension of time. They have time on their side. My best guess, this is what he said in the FT, my best guess is that we would leave rates here for an extended period of time until we get a lot more data to convince us one way or the other. Is the underlying inflation really on the way down? Post-PCE, what is your fundamental assessment? I mean, they're still playing for more time and extensively more time, and yet the PCE was the lowest so far this year. And disinflation is reaffirmed, if not necessarily reestablished with pace, but it is reaffirmed.
Yes, no, I agree. I mean, like last week's PCE was definitely a big relief for markets. We've actually broken from that 0.4 level that we have seen for the first 3 months. To us, they still need the CPI, core CPI, to be around 0.1 to 0.2, and that is going to be a slow drag. We do feel that they could see these numbers as soon as September, and that's where they will be ready to cut rates. But I think next, and that's what even markets are pricing right now. I do feel where we are standing in terms of rates, we will be more reactive to any weak data. For example, for payroll, we are looking for a below consensus number, i.e. another reading to come below the 200K number. I think that would again help that rally to come in and actually keep September live as well.
Okay. Keeping it live, keeping all the options on the table. Pooja, thank you so much for joining us this morning. Pooja Kumra of TD Bank. Other stories trending on your Bloomberg terminal this Monday morning. What have we got for you? Donald Trump has joined TikTok, the Chinese-owned platform. he tried to ban in the US. It's a bid to reach the younger voters. Fresh from his conviction in the first criminal trial of a former US president, Trump made his debut on the app with a 13-second clip alongside the Ultimate Fighting Championship CEO Dana White.
Well, David Ellison has sweetened his offer for Paramount. Ellison's offer is said to include an option for non-voting shareholders to cash out a portion of their stock. It would be for about $15 a share. Now the decision to approve the deal, as it has been, is largely in the hands of Sherry Redstone, the chair of Paramount's board.
The latest Caixin survey shows China's manufacturing activity expanded at the fastest pace in almost 2 years in May. The upbeat results contradict the official data that showed factory activity unexpectedly contracted last month.
All right, coming up on the show, the chip giants are buckling down. NVIDIA and AMD both announced their plans for AI. Competition's heating up, Manus.
Yeah, we'll bring you a couple of lines from that. Danny likes them. Later this hour, Aramco sellout stock offer, returning production from OPEC Plus with Rapidan Energy founder Bob McNally. Context matters on Bloomberg.
Laptop, your future PC will become an AI. It'll be constantly helping you, assisting you in the background. The PC will also run applications that are enhanced by AI. And your PC will also host applications with digital humans that are AIs.
Well, the chips are getting a boost this morning, kicking off the week, both for NVIDIA and AMD, unveiling their plans for chip upgrades. You're right. After the results, you get an upgrade plan. Tom McKenzie is with us this morning. I mean, there's some cracking lines in this announcement. I won't take them all away from Danny. I'll go for the really boring line, which is 98% cost savings and 97% less energy.
Oh, you're good.
I'll leave the lovely line for her. You see?
Shares.
We share. But here's the thing. It's just the speed with which they introduce new product.
It is, and I had this image of Manus Cranny standing outside the Apple store with his tent to get the latest product. What, 10 years ago? I feel like this is possibly what's happening in the world of AI and these chips, because this is a reminder that this is a CEO, Jensen Huang, who is absolutely determined not to be sitting on his laurels, given and despite the fact that they have this massive moat versus their competitors. This is a CEO who is continuing to drive that innovation, and this is what the message, at least, he's trying to push. And he's had that again, and he's pushed that message again, describing this as an industrial revolution. Now, updating in terms of the product cycle, and that's what's really clear and really key, is this annual product cycle that they're now aiming for. So the Blackwell Ultra, he has flagged for 2025, and then a new platform for which we got few details, Rubin is what it's being called, for 2026. He also updated on additional measures around tools that they're pushing out right now and additional measures around software. Because again, this is a hardware, but also a software and services business now. And again, it's just that reiterating the annual product cycle, that was key. And just the fact this is an executive in the team who want to at least push the message that they continue to innovate at pace.
Well, one of the quotes I want to talk about was just shown while you were talking, Tom. The more you buy, the more you save. That is CEO math. It is not accurate, but is correct. Is that a play on girl math? I don't know if we think Jensen Huang knows the internet means.
I've got nothing to say about. I just wanted to be made very clear. I've got nothing to say about girl math.
Manus isn't online enough to know about girl math.
It's like men opening fridge doors.
I'm not sure what that one is, but okay. So Tom, here you have Jensen Huang saying, look, everybody needs to spend on AI. Everyone needs a plan. It's CEO math. You got to spend. That's the way to save money, which is counterintuitive. But AMD also comes out with their plans for upgrades to eat into some of NVIDIA's market share. Is this still NVIDIA's world, or does it have some real competition?
Yeah, we are still living in NVIDIA's world, but that's not to take away from the fact that AMD is putting real effort, putting real money into trying to close the gap. The gap is still huge. Look, NVIDIA have about 80% market share. They have annual sales of about $100 billion US. NVIDIA, just for the AI chips, is targeting sales of around $4 billion. So 4 to 100 billion. There's the CEO maths for you. But they are innovating as well. They came out with a new chip that they say on many measures and metrics matches what you're seeing from their key competitors. NVIDIA, of course, case in point. MI325X, that's one for Manus in terms of the name of this chip. That was unveiled by AMD. He can add that to all the other stats he's got on the back of his head on this story. And they are also pushing this annual cycle, tech cycle, or at least innovation cycle. That's interesting as well. Look, the gap is still huge. AMD are playing catch up. The moat is enormous, but they are now a significant player as well. They're not matching NVIDIA at this point. But look, they're coming out with these new chips, the upgrade cycle, and they're taking this very seriously indeed. What Jensen Huang was also saying, interestingly, and AMD will be taking a line from this, is pushing AI now into at the retail level, the laptop that you buy, but also at the business and corporate level, everyone from shipbuilders to drug makers, he name-checked those sectors in terms of embedding this AI at point.
Tom McKenzie on CEO Math.
He's on fire this morning, isn't he? He's
he
on
really
fire.
is.
Yeah.
Tom, thanks so much for joining us. Tom McKenzie. Okay, from CEO math to IPO math, Saudi Arabia's top executives are heading to London and the U.S. are trying to drum up demand for the $12 billion share sale 5 years after it scrapped an international roadshow for its IPO. Let's get to Bloomberg's Horizons anchor Jumana Bersechi in Riyadh. So, Jumana, are they going to strike gold this time around with the foreign funds?
Good morning, guys. Well, it certainly appears to be the case. The books officially launched yesterday, off to a flying start. Within hours, they were already oversubscribed. They're obviously looking to raise $12 billion. The book building process is going to continue throughout the course of this week, but you've got to think that the orders that came through yesterday were mostly regional. It was Sunday, after all. Many of the international community were not in for trading. And so the big focus this week is what can be done to attract the international community. You'll remember back in 2019, the inaugural IPO in December 2019 raised $30 billion, but only 23% of that came from the foreign international community. And so what they're doing this time around, according to our own reporting, Matthew Martin put out a note this morning saying that they're actually engaging in a roadshow to appeal to some of those international investors. And key there is Aramco's dividend. They pay a very high dividend yield compared to some of the other oil stocks in the sector. And then you also want to bear in mind that this time around, there is a lot more visibility vis-a-vis those dividend payments and vis-a-vis the cash flows as well. You're looking at a market cap of around $1.8 trillion. The big question, though, is when it prices at the end of this week, how much of that book is coming from the international community.
Yeah, well, it's going to be interesting to see what they manage to do in London and here in the US in terms of that rallying call. Look, the other critical event, you were there to cover part of this, is the OPEC Plus meeting. It's interesting political nuance that it shifted from Vienna to Riyadh. The Emiratis were there, the Russians were there. It's the OPEC Plus deal. What did they strike on?
Well, as you know better than anyone else, Manus, a lot of intrigue going into this meeting, a lot of last-minute logistics changes, and I think people were surprised to hear that some members of OPEC Plus were actually coming physically to Riyadh. And it later emerged that the reason they were here is because they were part of the 8 members of OPEC who had participated in that voluntary cut, the 2.2 million barrels per day output production curbs that were introduced in November 2023. And so what came out of OPEC Plus yesterday, 2 major announcements. The first is that the group-wide production targets are going to stay the same until the end of 2025. One small exception there, a little bit of a win for the UAE. They managed to carve out 300,000 barrels per day extra production for themselves in 2025. So big win there. But then on the voluntary curbs, the initial reaction to the market was a bit of a surprise because we saw that they were extended only by 3 months, after which there's going to be a gradual phasing out of those curbs, i.e. more oil is going to be supplied back into the market by Q4 of this year. And what OPEC are trying to do here is continue to support prices, but at the same time manage some of the member states who are pushing for higher market shares. So it'll be interesting to see how this evolves over the course of the summer. Demand and the Fed in focus.
Jumana, thank you so much. We'll track the oil price through the week. Jumana Bersechi there. Context Matters on Bloomberg.
Let's get you some front page news. A look at what's making headlines around the world. We have a lot of political things to cover, a lot of presidential races on the New York Times. They lead with the story of Claudia Sheinbaum making history, the first woman and Jewish person to lead Mexico. It was largely seen as a referendum on AMLO. She's the continuity candidate, but she also now faces higher crime and a fiscal deficit that's ballooned.
And then the FT leads with the Indian markets. They're hitting record highs again on the back of politics. Modi, Prime Minister Modi, his third term promises to be more economic growth and market-friendly reforms. But we've got to recap this again. I mentioned at the top of the show, of course, it is GameStop. It was up, 90% when we walked in and the market opened at 4 a.m. So this is all to do with Roaring Kitty coming back to life and, of course, a Reddit post, which for the first time in 3 years, we can't name the Reddit post, but it's barnstorming, isn't it? Look at it, 67% at the moment on GameStop.
Yeah, he just posts that he owns GameStop and this weird
I love this
reverse Uno card tweet. You know, I can't help but wonder if Keith Gill is just like, hey, you know what, I want to buy some stuff. Maybe I'll just post my GameStop holdings. This man can make money so easily. It's remarkable.
When you own the community and the community on Reddit or whatever pays so much homage to you. By the way, AMC got a kicker as well, up 33%. So we'll keep an eye on those old meme stocks. Go on, Keith.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The AI race heats up. NVIDIA unveils plans for annual chip upgrades, while AMD speeds up the launch of its new processors. Sold out. Aramco's $12 billion stock offer sells out in hours. Executives gearing up to gather foreign demand this week. And we're live to Dubai at the annual IATA meeting. We'll bring you our exclusive interview with the Virgin Atlantic CEO, Shai Weiss.
What did you call Friday, Manus? I love that. You said it was like a Black Friday shopping spree.
It was like the last 20 minutes in a Black Friday sale. Click, 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 click.
But it's exactly what we had, right? It was a sell-off Friday, and all of a sudden at the end, a remarkable recovery that we end up 0.8%. It wasn't GameStop. That's today's story. That's why we're rallying in the meme stocks with Keith Gill coming back. But S&P futures up 0.2%. Your U.S. 10-year yield, that comes down nearly another, let's call it 2 basis points. We're under 4.5%. The soft landing trade is in after stable PCE reignited that trade. The front end also falling well below 5%. And we're going to get into this, Manus, so I'm not going to steal all of Bob McNally's thunder. But Brent crude, little change this morning, up 0.2%. It is the voluntary OPEC cuts, and the supply reductions gets rolled back into October.
And it is quite a nuanced change between the sort of the major commitments for cuts and perhaps the scale of rollback. And also the Emiratis got a little bit of an extra kicker in terms of their production. Depends which research you read. We've got RBC in the house. We've got Goldman Sachs in the house. But then, of course, we have our very own Bob McNally to talk to. Oil is steady this morning. OPEC Plus delivering what I'd call a two-tiered solution or proposition for the market. Extending the group-wide cuts to 2025, but it also laid out a framework to bring barrels back later this year. What can we make of the deal? Rapidan Energy's Bob McNally puts it to the market like this. OPEC Plus clarifies, soothes and signals lower production for longer, soggy demand readings, and wilting spreads and cracks, and rising speculative shorts induced OPEC Plus to extend. Bob is with us now. Bob, good morning to you. We have this near-term extension in the oil cuts through to the end of the third quarter, and then a slow add back. I want to understand the scale and the cadence of the add back and the impact. Good morning.
Good morning, Manus and Danny. Great to be with you. Yeah. Look, the main takeaway here is that OPEC Plus realize fundamentals are not firming as fast as they had expected, and they need to be lower for longer. So let's just break it down. First of all, you had 2 million barrels a day of collective wide cuts due to expire at the end of 2024. They said, nope, that's going into 2025. Then you had 1.7 of of voluntary cuts among 9 producers, also due to expire end of 24. They said, nope, we're going to the end of 2025. Message, OPEC Plus is going to be on the job well into next year. Okay, they didn't wait till December to do that. They did it now. Then you've got the real game. The real game in town is the 2.2 million barrels a day of voluntary group of 8 cuts, featuring the Saudi 1 million barrel a day lollipop. Now, that one, they said, look, that was due to expire at the end of June. We're going to the end of September. And then in order to provide more clarity, they said, look, when this thing ends, we're going to gradually taper out of it at the pace of about 180 to 215,000 barrels a day, gradually. Now, everyone, the bears said, oh, no, they're saying they're going to dump oil on the market. Well, wait a minute. They also said we can cancel, delay, reverse this tapering at any time. So net, I'm not surprised to see the oil market hasn't moved around much. They provided clarity. They said, we know we have to be in this game for longer. And they took care of some big decisions that we otherwise would have waited to until December 4th.
Well, Bob, I wouldn't be doing my journalistic duty unless I, gave a word to the bears, some fair and balance. Goldman Sachs is one of them, basically saying that rollback, that October 1, that once that very detailed plan is in place, even if OPEC, to your point, is saying that they can undo it, that'll be very hard to do. They say it makes it harder to maintain low production if the market turns out softer than their bullish expectations. Why are they wrong, Bob?
They're wrong because the OPEC Plus and this group of 8 and Saudi Arabia have demonstrated over and over again, if they have to adjust, they will. So if we get into August and September and we have another disappointing quarter of no inventory draws, if macro is weaker, et cetera, I don't think it's a problem at all for the Saudis, the UAE, and their other 6 partners to say, we're going to push back this tapering. I don't think it's a hard lift procedurally, politically, or anything else.
So you've taken a lump out of Goldman Sachs. Good man. Monday morning. Now, Goldman's, they're just wrong. What about Javier Blas? Let's have a pitch back at Javier Blas. Javier Blas reckons that OPEC Plus, he's now an opinion columnist at Bloomberg, not a reporter, and he says they've thrown in the towel on $100 oil. Have they?
Javier and I have a friendly disagreement on whether the Saudis target an oil price. I respect him enormously. And in my experience and from my conversations, they do not. They tried that in the 1980s, and it turned out to be disastrous. And they still remember that very well. They often talk about that. I think they're after 3 things: stability, stability, and stability. They don't want big stock builds. They don't want big stock draws. They can't really choose the price they want. I think they have to sort of aim at stability. So I think I'm not sure they were how hard they were on $100, but I respect Javier enormously.
What about this IMF study that basically said that prices need to be close to $100 a barrel for MBS to fund some of the plans he wants to do? Is that not in the back of the Saudis' minds?
No, every time I see a report that this price is needed for the budget or that price, don't folks realize revenue is a function of price and quantity? If the Saudis wanted to drive oil to $100, they'd probably have to drive their production down further, reducing their revenue. So it really depends on whether OPEC or Saudi Arabia has pricing power. So no, I don't think they associate a given price with a revenue target, because the question is, what does our output need to be to get to that price?
Well, the pricing power is contingent, presumably, on the demand factor in China. We'll come to that in a moment. We need to squeeze another couple out of you. I want to talk to you about price. You say stability, stability, stability is the objective, and they're not targeting price. Well, then where is, and I would call it a comfort corridor on the floor? Where is the bandwidth that they are comfortable with on the downside, which would prevent them having to scale back the rollback?
I think there's probably a comfort level right now in the $80 a barrel range, the $80, $90 a barrel range. The main thing they're worried about is the thing we're all worried about, is macro. I mean, we're all Fed watchers now. Everything's being driven by the central banks, the macro headwinds. So I think they're very happy with $80, $90, given the enormous uncertainties, both macro and then geopolitical in the world, Manis.
While we're talking about the desire for stability, what do you make of them doing a remote meeting, but really a Saudi meeting where people went to Riyadh instead of the spectacle, instead of the circus of Vienna, which, let's be honest, doesn't exactly promote stability?
It's a big group, 22 members. Some of those ministers really look forward to getting out of their countries and traveling and being in person. So I think there's that. Now, on the other hand, this meeting turned out to be a lot bigger than we all expected, right? They took decisions this weekend on UAE's production capacity, on extending the cuts, that we all thought they were going to take in December. So not too much of a surprise, given the enormity, the portentousness of these decisions, that they wanted to be in person, at least some of them. It shows a flexibility, procedurally.
Was it a policy of appeasement to give the Emiratis 300,000 extra barrels of production next year, or just good governance?
I wouldn't call it appeasement. It's, look, the Emiratis have increased their production capacity. They're going from 4 million barrels a day in 23 to 5 million barrels a day in 2027, and they're hitting it faster, right? They went up from 4.6 to 4.8 this year. So the UAE has been holding a larger share of its production capacity in spare. It's been carrying a bigger burden. This is more like giving UAE, I think, its due share, given its enormous increase in its production capacity.
I'll probably get in trouble for having said, was it a policy of appeasement? But hey, what the heck? Tell me this, the IPO roadshow is on the way. You're an American, you've been advisor at the White House. How much will the foreign buyers take of Aramco at the moment? Is the market in good form to pick up Aramco?
I think so, Manis. You know what? The sale is coinciding with a shift. And I was just in Japan, too. It's amazing. The world is shifting from rapid decarbonization, peak oil demand is around the corner, to geopolitical risks, stronger demand, slower EVs. And I think and you see this with the consolidation in the United States as well, with the oil companies. You're starting to sense that demand is not about to peak. We're structurally tight toward the rest of this decade. Therefore, sales like these, consolidations, people are looking to grab hydrocarbons before they take off.
Oh my God, how crowded was Japan and Tokyo, Bob?
I've not
everyone's
been.
going there.
I've not
Are we the only
been.
ones?
You've been.
Yeah, like 2 years ago, but now everyone's going. Bob went. We're missing out. We got to take the show on the road to Japan, obviously. A cheap yen. Bob, thank you so much for joining us this morning. Rapidan Energy founder Bob McNally. Okay, coming up, we have our exclusive interview with the Virgin Atlantic CEO, Shai Weiss. That's up next on Bloomberg Brief.
We're looking at a very strong summer, also a very strong winter. Come to that, we've had a very good year. 23-24, we finished that in March, and we're ahead of where we were this time last year. So demand remains very strong in all the segments.
That was the Emirates airline president Tim Clark speaking with Bloomberg's Guy Johnson. Guy has been on the ground in Dubai at the IATA meeting. He's there now. Let's get over to him, who has another top voice in the aviation industry. Guy.
Hey, Danny, thanks very much indeed. Yeah, I'm joined by Shai Weiss. He is the CEO of Virgin Atlantic. Virgin Atlantic this year celebrating 40 years in business. Shai, great to see you.
Nice to be here.
So, 40 years, what's next?
Another 40 years, first of all. So, it's delightful to celebrate our 40th anniversary. June 22nd, 1984, a flight from Gatwick into Newark Airport. And, the thing that sets us apart has always been the red thread, our people, the magic that we make happen every single flight. Yeah, so we're delighted to be here. In the future, well, the future is bright. We have a very clear mission to be the most loved travel company and become sustainably profitable. And we're very much on course to achieving that.
Okay, we'll pick apart the profitability story in just a moment. So in terms of new routes, in terms of what you're doing with the airline this year, what are the plans?
Yeah, so today we're announcing actually 3 new partnerships. We're now announcing a code-share with El Al and 2 of our SkyTeam partners, Saudia and SAS. And we're also announcing that we're returning to Tel Aviv on September the 5th. So, increasing connectivity to our partners in SkyTeam and providing our customers with more choice, and actually people coming into London and flying beyond.
How easy was it to make the decision to return to Tel Aviv?
We were the last carrier to actually fly into Tel Aviv out of the UK. So the decision was made a few months ago. I think September is the right time to do it. And it's all about first of all, demand, but of course the feeling that our people should be comfortable flying there, because our people stay overnight in Tel Aviv. and we want them to be comfortable doing their jobs, and I think September is the right time for that.
This isn't based on progress of the peace deal. This isn't based on what is happening with the geopolitical story. It is just based on a demand story and the certainty that you have that your people will be safe.
Yes, and of course, the Delta is flying this week to Tel Aviv. I think United is coming after them. So I think there is a sense that, the carriers are seeing that things have stabilized. And of course, with Biden's announcement, and hopefully the parties can find a way to accept his proposal and get much-needed stability and peace for everyone in the Middle East.
Interesting that you've got, almost on the same piece of paper, a code-share with Saudi and a return to Israel.
Yes, and the beautiful thing about it is we've added SAS, so kind of our Scandinavians in the middle, to show that Virgin Atlantic, of course, does business with everyone. Wherever there is demand, and it's our partners, we are happy to provide it. But it's a three-way announcement today. We could have done it individually, but actually all these conversations started a year ago here in IATA. It's nice to see progress a year on.
Let's talk about politics. British election coming up, and it looks as if we're going to see a change in government. What do you want to see from that next administration in 10 Downing Street? It looks like it's going to be the Labour Party. That's what the polling is suggesting at the moment. What's the message? What does the aviation sector, what does Virgin Atlantic need to see from that next government?
I think we've been very, very clear, and it's really not about who wins the elections. It's about a new sense of pride in aviation in the United Kingdom. There's some amazing companies in the United Kingdom, but I think, the need to tax aviation companies with very thin margins, the fact that there is a lot of policies and sustainability, and the fact that we don't recognize that as an island nation, we really need a thriving aviation industry. So what I'm looking for from the government is leadership and understanding that aviation is the friend of the UK public and the friend of government. We need it for trade, for, of course, connecting families and loved ones, for tourism. And a strong aviation, a strong Virgin Atlantic can only be achieved if there is support for that from government.
One of the key things that obviously you've been talking about a lot over the last few years has been what has been happening at Heathrow. British Airways has been having the same conversation. Yes. There's a sense that maybe the customers, i.e. the airlines, have not been getting a fair crack of the whip in terms of the money that is having to be paid in order to make that airport work. Now, there's been some changes. Did the changes go far enough? What do you want to? Would you like to see? Would you suggest the next government that we see changes at Heathrow?
Well, first of all, it's a very opportune time. We have a new leadership at Heathrow. We have potentially new government coming in and potentially new ownership of Heathrow.
Yep.
There is no doubt in my mind that we need to see change at Heathrow. The service is simply not good enough for the most expensive airport in the world.
Yep.
It's the most busiest airport in Europe. It's the fourth busiest in the world. And when you're here in Dubai and Abu Dhabi and you can see what can be done with fantastic infrastructure, we need to see better on behalf of our customers.
What does that look like? What would you like to see the model being?
I'd like to see a more efficient, a cleaner, of course,
okay,
a
that's
safe.
all fine. But does the current ownership structure work? Would there be a better model that would work?
I think if we had the opportunity to actually participate in an ownership and running of a terminal, we would do a far better job.
You break Heathrow up into separate terminals.
That's one of the options. There are many options to consider. But first, let's not forget, Heathrow is a regulated asset base, just like Thames Water.
Yeah.
So there is a reason why they are regulated, because there is only one true hub in the United Kingdom. It happens to be Heathrow. When you tend to be a dominant player or a monopoly player, you tend to be complacent. And I would think that if there was free competition at Heathrow or more sense of competition at Heathrow, the service the consumers would get would be far improved and airlines could do a better job.
You don't think the Thames Water example is that actually competition doesn't work?
No, what I actually think is that just burdening stuff with debt, not thinking about the consumers at the end of the game. That's where things start to fail, and I think there's different models. Of course, water is not exactly airports,
sure.
But the parallels are clear, and the comment is fair.
You talk about Heathrow, Gatwick. You used to be there.
We used to be there, and
I hear that you'd be welcome back.
Yeah, that's what I hear, and we always like to be welcome back.
Yep.
It's 40 years for the first flight from Gatwick, and my answer is a very clear one. Never say never. There is the historic home of Virgin Atlantic.
Yep.
There are constraints at Heathrow in terms of the ability to grow.
Yep.
Never say never.
Do you think a Trump presidency would make a transatlantic airline's life more difficult?
The good news is I don't have to vote, and neither does anybody in the UK. But we do know that, of course, there is a special relationship between the UK and the US. So whoever wins the elections, I'm sure will recognize the need to establish that.
But it feels like we're heading into a more fragmented world, and the less fragmented world has suited big international airlines. A more fragmented world, in theory, would do the exact opposite. Is that a fair conclusion?
Well, you know, a unified word, I think, in a global world is better for airlines, of course, because airlines are necessary in that type of an environment.
Yeah.
A more isolationist world is not where we play in. There are 1.4 billion people voting this year. Of course, we're just about to finish the Indian elections, US, the UK, and elsewhere. We've just seen Mexico. So I would like to think that the people understand, the people who are voting understand that stability is good, that cooperation is good. It does feel a bit more fragmented, but, you know, airlines don't run things for 1 year or two. We run things into a very long future. Looking ahead, I'm pretty confident that the U.S. will lead the way in creating an environment that is inclusive.
Congratulations on the 40 years, Shai. Great to see you.
Thank you.
Thanks very much indeed for stopping by to see us. Manus, from
How was
Alpha,
that?
here in Dubai.
You're having the best life, aren't you, Guy Johnson there? Great interviews, great content over the past couple of days. Another exclusive interview with Guy Johnson on the ground at IATA. And don't miss another interview with the United CEO, Scott Kirby. That's at 7:30 a.m. Eastern Time. Danny and I, we are checking the Mexican peso. Of course, we're in the midst of a host of elections. India, Mexico. But look at the peso. Again, the concern with Bloomberg have sort of put out their note. Constitutional reforms, the grip of constitutional reforms may indeed be emboldened by Ms. Sheinbaum, and that could weaken the checks on power. That's what Bloomberg are saying. There she is, victorious.
Right. It's because she has a supermajority. So is there a check? I mean, the irony, of course, is that she's largely a continuity candidate from AMLO, which saw huge gains in the peso. Maybe less so about what the president did, maybe more about the strength of the U.S. and Mexico's proximity to it, and at the same time, a central bank who hasn't cut as much as other Latin America central banks.
Yeah. Long live the carry trade. It's a great debate. What's it called?
The super peso.
Super peso.
The super peso, that's it.
I was in Mexico earlier this year. It wasn't cheap. Right. We got to go, apparently.
Go to Japan next time.
I'm going to Japan. All roads lead to Japan. Good morning.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading week this week. We're going to get USM manufacturing PMI out at 9:45 a.m. Eastern, then manufacturing ISM at 10 a.m. The ECB rate decision, that comes on Thursday. We'll, as always, hear from Madame Lagarde. And we round out the week with U.S. jobs report on Friday. Manus, how are your stocks looking?
Tier 1, Tier 2. We're
talking
about the data. She's jibing me about the quality of the data. I've got Tier 1 stock for you, NVIDIA. Okay, we're all going to be able to retire on that. Rising, they've got AMD and NVIDIA both updating some of their chips that's available to us. Paramount up 5.5%. Film producer David Ellison's offer for Paramount includes a $15 a share cash out option for non-voting shareholders. And then all hail GameStop. Roaring Kitty came back showing a receipt that Keith Gill had a big position in GameStop, and the stock has just stormed up this morning. We started the day at $7 billion in market cap added. Now we are
just under $6 billion.
Drum roll.
Another bad day for those who believe in the efficient market.
Roaring Kitty, I love you. And AMC had a nice bit to it as well. Go on, the meme stocks.